Hi, and thank you for joining us for this monthly brief on alternative strategies. Over the course of August, European investors bore the brunt of the market turmoil. Turkey's currency crisis and the widening of sovereign spreads in Italy translated into an underperformance of European assets versus the US, both equities and high-yield credit. In the hedge fund space, CTAs made the most of a volatile August. They delivered positive returns in the range of 2–3% depending on the benchmark. Their long positions on both equities and fixed income were supportive, and from a regional perspective, their limited position on European equities were a source of gains, but their short positions on US bonds detracted from performance. On commodities, their long energy, short gold were also a source of gains. On a negative note, global macro and long-short equity strategies underperformed. EM macro funds got hammered by Turkey's currency crisis and its ramifications across the EMFX space. Other macro funds suffered on the back of their long positions on Nordic currencies, which depreciated against both the euro and the US dollar. Meanwhile, long-short equity funds also underperformed. They reduced their momentum bias in portfolios and missed the recovery in such segments of equity markets. In terms of investment recommendations, we have maintained a neutral stance on CTAs until now, but we see supportive factors which suggest that an overweight stance might be deserved. Trend following conditions have improved over the course of August. Across asset classes, positioning is not stretched, and the risk of a significant trend reversal appears to be contained. The main risk for the performance of CTAs would be a significant rise in bond yields, which would hurt long bond positions. But declining energy base effects suggest inflation might have reached a peak for some quarters, hence limiting the downside risk for CTAs. Thank you for your attention and see you next time.